Hey everyone, and welcome back to The Explainer. I'm so thrilled you're here today because we are going to dive into and entirely demystify a topic that absolutely every business owner has to face eventually, but, very few of us actually want to talk about it. Yep, we're getting into the wild, sometimes overly complex world of small business insurance. We're going to take all that awful industry jargon, toss it out the window, and break this down into a really clear, easy-to-follow journey.
Look, let's just get right to the heart of it. Should you buy business insurance yourself or should you use a broker? It's a crucial crossroads. When you're building a business from the ground up, you are watching every single dollar, right? So when another founder tells you, oh, you should just get a broker, it's completely reasonable for you to wonder, wait, is that genuinely good advice or is the insurance industry just trying to upcharge me? Today, we are not going to tell you which option is universally better, because honestly, there isn't one. Instead, we're going to figure out exactly which path fits your specific business right now.
But before we compare our two paths, let's set the stage. Section 1, the knowledge gap. Small business, big risks. Consider this totally staggering number for a second. 97%. According to the latest data, small businesses make up roughly 97% of all Australian businesses. That is a massive chunk of the economy. But here is the catch, and it's a big one. Despite being the absolute backbone of the market, there is a dangerously low level of insurance literacy among early-stage founders. People are out there hustling, launching businesses at lightning speed, but they just aren't fully grasping the protective safety nets they actually need to survive if things go south.
And that knowledge gap? Well, it leads us right to the absolute villain of our story. We're talking about non-disclosure or misrepresentation. Basically, this means providing inaccurate or incomplete information when you fill out an application. And this isn't just a minor technicality. It is literally the #1 recognized reason that claims get reduced or completely thrown out. Think about it. When you buy insurance directly by yourself, the responsibility to get the details 100% right falls entirely on your shoulders. One simple misunderstanding of a basic question could leave you paying thousands for a policy that won't actually protect you when disaster strikes.
Which brings us nicely to our first option, Section 2, the fast track, doing it yourself or DIY. Honestly, buying business insurance yourself has never been more accessible. In today's digital-first world, you can often get covered in under an hour without having to speak to a single human being. It's like magic. But who's this actually for? Well, the ideal DIY candidate is typically a sole trader. Maybe you have 1 or 2 employees, you're working from a home base, you aren't giving high-level professional advice, and you really just need the standard covers, like public liability. Picture a freelance graphic designer working from their living room couch, taking on super predictable client work. For someone like that, logging on and buying a straightforward package is totally fine. In fact, it's highly efficient.
But we do need to shift our perspective here just a little bit, because fast doesn't always mean right. Direct platforms are incredible tools, for sure. You can jump online right now and seamlessly buy really specific products, like cyber protection, tax audit cover, or even commercial drone insurance in mere minutes. But when you use these direct tools, you are the one self-selecting your coverage limits. You are agreeing to policy terms you probably skimmed over, let's be real. In short, you are taking total 100% responsibility for your own risk assessment.
So what happens when your business outgrows that simple little checklist? That takes us to Section 3, the expert path, knowing when to use a broker. This second complexity enters the picture, that direct DIY approach starts to break down pretty quickly. Let's contrast our home-based freelancer with a totally new scenario. Imagine a 6-person tech startup. They're offering SaaS products to enterprise clients, handling highly sensitive customer data, and signing massive contracts that legally require specific professional indemnity limits. That is a complex environment. Once you start adding employees, professional advice, multi-site operations, or physical risk into the mix, complexity demands expertise. In these scenarios, the cost of getting it wrong heavily outweighs the cost of using a broker. And I think we need to completely reframe what a broker actually does. They aren't just salespeople walking around with clipboards trying to hit a quota. Operating under their Australian financial services license, they are accountable experts. They assess your actual real-world risk exposure. They don't just tick a category box on a website. They access a much wider market of specialty insurers that you literally can't find on Google. They negotiate terms on your behalf. But most importantly, they advocate for you during claims. Having a licensed professional firmly in your corner fighting for you when something goes terribly wrong is without a doubt the most valuable thing they do.
All right, let's put them in the ring together. Section 4, head-to-head,
DIY versus broker.
When we weigh these two options objectively, a really clear picture emerges. With DIY, your speed is incredibly fast, often same day, and your upfront cost is generally lower. But your claims support? Yeah, you're managing that entire headache totally on your own. On the flip side, using a broker is a bit slower. It's a deliberate process that can take days or even weeks. And yes, it involves a fee or commission that gets built into the premium. But in exchange, that broker advocates for you during a claim. We've got to change our mindset from brokers just cost extra money to asking ourselves, what is the ultimate cost versus the long-term value and protection of my livelihood? Because honestly, a cheap upfront premium on a DIY site is absolutely useless if your policy has a massive gap when it's time to actually make a claim. And speaking of those massive gaps, that brings us right to Section 5, the hidden trap, also known as the disclosure issue.
Let's circle back and build on that earlier point about non-disclosure. Under the Australian Insurance Contracts Act, you have what's called a duty to take reasonable care not to make a misrepresentation. Okay, let's translate that legal jargon into plain English. It means that if you answer questions about your business inaccurately on a direct DIY website, even if it is a completely unintentional, totally honest mistake, your insurer has the legal right to reduce or just flat out decline your claim. This is not some fringe risk. It is a wildly common trap for first-time business owners, which forces us to ask this critical, slightly uncomfortable question. If you got it wrong, would you be covered? Look, for businesses with nuanced risks, just having a broker there to guide you through those complex disclosure questions can easily justify their fees. They are held legally accountable for their advice, meaning they are actively working to save you from a catastrophic, uninsured loss. When you do it yourself, all of that accountability, it sits squarely on you. To bring this all together, let's look at Section 6, the compass. 3 questions to help you decide your path. I want you to ask yourself these 3 things and be totally honest. Number 1, could I accurately describe every single aspect of my business risk right now? And I mean not just what you do, but how you do it, where you do it, and under what specific client contracts. Number 2, if I had a massive claim tomorrow, would I know how to manage all the paperwork, deal with the insurer, and handle the negotiations? And number 3, is my business likely to look completely different in 12 months? Because if you're scaling, hiring new people, or taking on much bigger clients, your insurance needs are going to shift really rapidly. If you answered no to the first 2 or yes to the third, you are almost certainly venturing into broker territory. Ultimately, the way you plan to scale your business should dictate your entire insurance journey. If your path is simple, predictable, and steady, the DIY Fast Track is a fantastic, super efficient tool for you. But if you're growing, adding layers of complexity, and leveling up your operations, having an expert broker in your corner isn't just an extra expense, it's a fundamental investment in your company's survival. So I'm going to leave you with one final vital thought to chew on as you build your empire. Where exactly will your business be in 12 months? Thanks for joining us, and we'll catch you on the next Explainer.